Know the difference with Annex Wealth Management, joined by Eric Strom, Director of Financial Planning, CFP, enrolled agent with the IRS. He is back. Hello, Eric.
Hello, Danny.
You are here today to discuss life insurance, but from a different perspective. Most of us understand life insurance is something that provides financial support to ease transition, specifically during loss. It can fill gaps in income, save families financial hardship, but it also has a crucial role in succession planning. How about that?
Yeah, so for businesses, it can play an important role for business owners. That's what we'll talk about today.
Let's start there. What's the key difference between personal life insurance, which we're very familiar with, and insurance tailored for business purposes? It's called key person insurance?
Yeah, personal life insurance keeps your personal financial plan on track in the event of a death, right? For example, I've got young kids, so I have life insurance for that purpose. Key person insurance or other types of business insurance is used to keep the health of a business on track in case of the death of a key person in a business. That's the difference.
Are there any particular industries or business sizes where key person insurance is especially valuable? You were telling me off air a story of someone you know who's actually in the landscape business.
I'm glad you said business sizes because this is very important for very small or medium-sized businesses where the loss of one person, Danny, might be catastrophic to the business, right? That's the key. But then as far as industry, really professional services where you might rely on an individual's particular skill, that's a key area. Also, any business that has specialized relationships or maybe any kind of skills concentrated in one individual person, if that is the case, then you might want to look at insurance for that.
Interesting. Should we assume that the business is the entity that takes out the policy? Is this like term insurance?
It often is. 10-year term insurance is commonly used for this type, and generally we do like term insurance a little better for this type of coverage. Now, going back to your first part of the question about who owns the policy, there are different arrangements that we will get to in a moment, but generally for the key person insurance you mentioned, the business will typically own it, the business will pay the premiums, and the business itself will be the beneficiary in case there is a death.
Eric Strom is Director of Financial Planning, CFP, enrolled agent in the IRS. Key person insurance can mitigate financial risks associated with the loss of a critical employee. I'm kind of wrapping my brain around this. Can you give us an example how that would work?
So here's an example. Let's say you have a very small software company, right? And you've got one developer who's writing all the code and has a vision for the software. So clearly, if that person were to die, that is a major problem for the business itself. So that's an example. Or another common one you see are relationship or sales type businesses where you might have one individual or maybe two salespeople who own those relationships with key vendors. Clearly, if there was a death there, that would be a major problem for the business. So those are examples where you might want to have the business itself buy life insurance on that important person. So if they did pass away, there would be sustainment for the business.
Let's talk about buy-sell agreements and use of life insurance as part of a transaction. Can that be used to fund the buy-sell agreement?
Yes.
Say if the owner dies?
Yes, it can. It's going to depend on the entity. So let's say you have a partnership. There's typically a partnership agreement, or if it's a corporation, you have an operating agreement. So you may have buy-sell language within that agreement, or you could have a separate agreement. But in either case, essentially, life insurance can be used to fund that. And you're really just trying to say, okay, if there is a death, what transaction would we do there in terms of maybe it's a buyout of that partner who passed away using that life insurance proceeds?
You mentioned business-owned policies. Can you talk a little bit about what's called a cross-purchase agreement? And that's amongst owners.
Right. In that example, instead of the business owning the insurance, sometimes individual owners can hold policies on each other. Like Danny, if you and I went into business together, we could each buy a life insurance policy on each other where we're actually the owner. And then if you do that, you would want to create what's called a cross-purchase agreement, which is kind of a formal language that would say what would happen if there really was a death. Now, the number of owners is the absolute key factor here because if you have a ton of owners, it becomes very difficult to buy a lot of little policies on every different owner. But if you have a small number of owners, there are actually potential tax advantages of doing it this way. So it can be better from a tax point of view if you have a small number of owners for this style.
Final question. Who makes the call to get or arrange key person insurance? Is it the business owner? Is it a CFO? Is it somebody else?
Importantly, you should have many voices weighing in, right? Don't just listen to an insurance professional. You want to have legal counsel advising on that. Ideally, you'd have a financial advisor as part of that. But ultimately, the decision will rest with the business owners, or if it's a business that has a board of directors, then that would be involved. If it's a partnership or corporation, then we're talking about the multiple partners and shareholders that would kind of be those decision makers. But the most important thing is that if you are a business owner, don't neglect this. Everyone says, oh, it won't happen to me. And it never happens to you until it does, right? Insurance, not the thing we always want to be thinking about. And we at Annex don't sell this type of insurance, so this certainly isn't a pitch or anything, but we are looking out for that risk and really trying to encourage business owners to understand what risks you're facing and make sure, where appropriate, that you do get that insurance coverage to protect that risk.
Eric Strom, Director of Financial Planning, CFP, Enrolled Agent with the IRS. Thank you.
Thanks, Danny.